go for a Monday, folks. Let's get right to it. Let's not waste any time. We got major things to talk about. Major. Quite a weekend, quite a little breakdown. Our 2-3 day phenomenon already happened. And I'm going to start with the total crypto market caps because that's where the action is. And let's look at the arrows we drew. And let's look at the major developments that are here back retesting some big zones with the small bearish patterns that we were outlining for the type 1 reactions, and now they're here. So what are we going to do? What are we looking at here? Waiting on the HSI, of course, and that's some big stuff that we're seeing actually. Showing you guys total 3 crypto market cap index without Bitcoin and Ethereum to start the day, and we're trying to register an HSI on the daily, which is actually pretty significant because it only took 4 or 5 days to get down there. We know we need a check back. We know we need other things, but it's a start, and it is the reaction that we were targeting last week. Big shout out to the chat. What's going on, everybody? How are you this week? Great to see everyone. Please hit the like button for me and subscribe and tell only your cool friends about this podcast. I don't want any uncool people here, but everyone's cool that is here. But share it up. And the other thing, here's the resources. Get with our software, Harmonic Pattern Collection. Go to harmonictrader.com. That's where it all begins. And then once you sign up, register now. That's all free. Just need an email address to know who you are. Unless you're a Russian bot, please stay away. Still cleaning up after that mess, but get with the software. And I really want to make this a point that everyone should be with this. Everyone that's spending the time to learn. Listen, the software is a tool for learning and for actionability. So what we really do here is nail down those advanced strategies that make general patterns actionable. But as we've seen, we respect the levels. And if you're new, the software is going to show you things where your learning curve is facilitated rapidly. So send your TradingView username, not email, TradingView username to hpc@sr-analyst.com and get a 14-day free trial. We're no longer doing the second trial. It got abused, so we just got to make it easy. What's going on? Thank you, James. How's it going? Miss Stephanie, what's happening? I'll connect with you this week, I promise. Swooping Hawk, thank you guys. Tukafu, Frashogar, and the rest of the crew that are here. Fantastic. Also, about our Vegas event, big Las Vegas event. I think it's October 1st. I thought it was Friday, September 30, but let's look at the calendar really quick. I'm going to be in there for a long weekend with Mitch Ray TA himself. And he and I are going to do our first joint live stream, emphasis on the joint, as Mitch says. That's kind of a pretty funny comment, by the way. But I think it's going to be Saturday, October 1. Now, we have stopped we've paused the number of people for now because he and I are lining up the room. We might have more room for people later. So if you're still interested, we're going to have a firm cutoff probably in a week. And we will let you know if we're going to take on more people. We're already up to 50 or more. We could get as much as 100 if we really open it up. So contact Miss Stephanie on the Discord, and she'll set you up. At least get your information and kind of get you on that waiting list. Because if we get a big enough room, we are going to open it up. The other thing, a lot of people are on the MetaTrader HPC Pro for your crypto. And that's a great platform. I mean, that does everything and has all crypto feeds. So check that out. And then finally, some of the stuff we need to talk about, things that I'm going to talk about today are in volume 3. So just click on that link. Make sure you download all the books. Even if you're not a reader, you can at least review the illustrations. And we're going to talk about type 1, type 2 today, especially the return phase, which is where we are now. So get with volume 3. That's where all that information is. It's not in the other books. Absolutely. Again, harmonictrader.com. That's where it all begins. And it's free. And then when you want to sign up or for premium services, become a gold member, folks, spend 30 days with all of the materials before you even subscribe to the premium stuff, because the stuff that I do on the gold and silver members is a bit more advanced. So if you're new, you don't have to spend any money to get with the program. That's why we want to do it this way. So take your time with it. Don't no rush. We got plenty of time. Always plenty of time. Plenty of opportunity as well. Let's get to these markets. Let's get to these total indices, because they are showing us what's going on. Underneath the surface, you got a lot of individual T coins that are popping off, and some that look like they're going to go to zero. So the total index, I think, gives us the broader idea of what is potentially shaping up. And on total three, we take out Bitcoin and Ethereum, which actually gives you a good idea of what these S and T coins are going to do. That we have harmonic strength index popping today, but that's not going to be official until the end of the day. And personally, I want to see, and here's a little side note for those that do have the software and are looking for some kind of further advanced insights on how to read HSI. Here we have a bullish development of harmonic strength index. Now, it will not complete until the close of today. So there's so far your close. So far, that's the closing bar. It won't be till tonight, but you need to see this thing come up and actually recover today. It's just needs time, and we'll know by tonight. And if that does, okay, if that does trigger by tonight, we would still want to see the check back down to these lows. So we're not done with this yet. The other thing that concerns me a little bit is that if we have a bullish HSI signal, I want to see the individual price candle be bullish. That's something I talked about last week. I think it's important, and I was saying wait for one candle. Well, we got it. Now we'll see. This could be something where by Thursday we go through the check back, retest, and then we start for possibly the return, where since we had that small bat pattern off of the low from June, very significant for now within the larger zone, we read that as just taking more time. It's going to require more time to get out of this mess, get out of its own way. Look, the last couple of days straight down, your 6 sessions straight down since that bat completed. Not all of them had confirmation, so we know we're in a mini reaction phase, and that could take us as low as to target 2, which is on this index, on total 3 index at 371 billion. So keep that in mind. It's still early on that return phase. We haven't taken it out. Also, we need to break that downtrend. So if we bounce in here for 2 or 3 days, don't be surprised. If we bounce between 390 and 380 billion on that market cap, don't be surprised. Same thing, total 2 actually hit its target 1. And this is another sign. This is something where I probably need to talk more about the return phase, where reaction from completion of the pattern down to target 1, that's the structural limit. That gets us to T1 on, and this crypto market cap takes out Bitcoin. So it includes Ethereum. We know Ethereum's been a relative outperformer. Bitcoin, we'll get to that in a second, looks ugly. But we are certainly structurally at that, not only at that target 1 off the bearish pattern, but take note, and this is important, where we come back. Remember this big crab pattern? And that's among others. A lot of these have the crab pattern in these big crypto market caps. You're actually retesting the minimum support point of that range, which is 584 billion. So these back-to-back pattern dynamics, they're actually more significant than single patterns. We've seen them in a number of situations. We're going to look at a couple of major stocks that have that going on at the moment. This one, until HSI comes out, this is total 2. Yeah, total 2, excluding Bitcoin. This is the thing we need to see. And again, shows us that we're probably another 2 days away. That has to come out. It's not out yet. Some constructive things to take note of. Our amplified RSI has triggered out. So there's the complex formation at the original low from June 21, basically, that came out. And we got to the overbought. Now we come back for its own type of RSI BAM return, meaning first test, second test, it's completing above that prior reading. All right, that's constructive. It's nothing yet. It's not anything to bank off of yet, but it helps in terms of stacking evidence of a potential end of the bearish reaction off that pattern. That's all this is. We're still in reaction phase, no matter what. We're reaction phase off the big pattern. We're reaction phase off the small pattern. And so expect chop. I expect something like this, which is what we drew last week. You come down, we need to trigger HSI, do the check back. Maybe in a couple days we start that for next week. That's your best case scenario anyway. But we are looking for another harmonic strength index. It's definitely not anything that you would prefer to have seen this already run and blast through, but that's not what it did. Total crypto market cap, that did not register any kind of pattern, but has like a mini bat or anything. But you are oversold again, which actually, okay, for that, this is total crypto market cap. There's our initial reading from June 21st that we were in front of. Now here, we need to see that come out, and that has to come out. That means today has to hold, tomorrow needs to be bullish, and we then will print an arrow maybe tomorrow like that. So we're looking for some kind of stabilization despite this massive drop, which was, yes, ugly 2 days, 3 days ago. I wouldn't say necessarily that was a crash, but that was a more like a slash. More like a slash. But if it sets up, I mean, look, at least Amplified has registered. Green line has stopped. That's an important thing to be looking at. We always look when the green line stops. That means your secondary signal for RSI has completed, and we start looking for some developments to the right of that. It's a leading early indicator, but it's in the right spot. It's much like, it reminds me of June, where it looked really scary, but hasn't triggered yet. At least it's in the right position, and at least this amplified reading there did not take out the prior complex reading. This complex reading from June took out that prior complex reading from May. That's not what you're looking for between two signals. I would love to see this thing pop out in the next 48 hours. And then we come in Thursday, and by Thursday, we have some things that are set up. But it's not there yet. How can you edit your colors for HSI and RSI? That's a good question. A lot of that's are in the videos where you just hit your settings and hit your style, and all of that is in there. Check that out. Are we going to dump these? Visuals by Vlad is asking, just tell us, Scott, are we going to dump these harmonics by failing? No. Look, why would you dump harmonics? Why? I mean, we've been talking about this mini reaction, and now we have an arrow, another green arrow. That's there. but you're still 2 days away. I don't, not much has changed within that. You're taking more time, and we've always said this is reaction phase. About the only thing that I thought was going to bust through is I thought Ethereum would go above 2,000 to 2,400 now, and that's not doing it. But not a biggie, because that too is in the oversold. Here's Ethereum, folks, on the daily. This has a lot of the same properties as the total 2 and total 3 index. There, amplified has triggered. These are all early. HSI not out of the zone yet, and that's the only thing we're looking for. Looking for HSI to pop out and get a secondary higher reading, okay, on Ethereum. 2,400, 2,485 is still your target one. I just think some of those T coins got blasted, which brought down the rest of the sector. It's going to take more time, no doubt. And we've been saying all along, okay, the reaction phase of what we're looking for still sets us up for something later this year. And again, that's probably across the board of what we're looking at for NASDAQ, which is rolling over. But that's still the proposition, folks, of how I would read that and where we're doing that return phase towards the end of the year. Here's Bitcoin. Bitcoin's an important chart. Bitcoin is trying to trigger again, which would be significant. Despite as ugly of a 2 months that has been, I mean, you just flatlined. You're not doing anything. But if Bitcoin wasn't leading this rally, Ethereum was. But we're trying to pop out today. Bitcoin might be in a spot where we register today, and I'll tell you what, we have a bearish candle right now. I would not be surprised to see that thing be a bullish candle by 7 o'clock tonight, which is the cutoff date, cutoff time for the daily close. Right now, for Bitcoin, you need a bullish candle, and that's above 21,600. You need to rally $200. All right, $200. You get a bullish candle. That's incredibly significant. The reaction phase would be over. Also, on the daily, you would have 1 and 2 HSI readings that are higher. First one that would be higher since last year. That's also another larger macro harmonic observation that's critical. It's very unusual to get a higher reading, something like that, for the first time without it leading to some kind of constructive move. All right, we see that if we're failing, or if we had a lower HSI, let's just say that triangle was below that rating. Yeah, that would be tough. But it's more like this. Here's go to Bitcoin from earlier this year. There's an HSI trigger, first one of this year back in January, and then the second one that registered a bit lower. Here is the first one that registered higher after that move down, and it led to a reactive move. That's how to read it. Again, we're still reaction phase, and we're still trying to get out of the downtrend line with all of these. Every market has this proposition to it. Every market is underneath its downtrend. Stocks, mostly tech, crypto, big crypto, okay? And don't be surprised to see chop, to see consolidation as they try to wrestle with that whole downtrend. And everybody is, the predominant theme is people are extremely bearish still. That's okay, but it's going to take more time. The other one, Binance Coin, that was one that we talked about on Thursday. Okay, that did register depending on your data feed, but we had the bat. Let's blow it up. This is another back-to-back beast where, you have the software is generating it here. Okay, but what do we want confirmation, which is your arrow. get your sun icon, and then the arrow. Then you're in business. And we said 330 at the hop leads to this type 1 reaction. All right. And this also has, it did not hit target 1, which was 256. All right. It's trying to poke back up, maybe more consolidation. I would still think that this checks back here. Get the check back there before it does anything else. And Binance Coin by far is one of the strongest cryptos of all of them. You know, it's probably lost the least amount. You go to your weekly. All right, it's not like it's done a 90% correction. What's that low to high? It's like that. Yeah, about 73%. Now, on the weekly time frame for Binance Coin, this is what I'm looking at. And this is why this week is going to be really critical of how we finish the week. What do those daily signals do? And then what do they do relative to something like that? Because the weekly is trying to come out of the zone. The weekly on Binance Coin is trying to pop, but that will not register officially until Sunday. It's a critical week. It's a critical week. I'm keeping an eye on that. That tells me that there's still more time in all of these. We respect the levels. And 256 on Binance Coin. Not only does that get you to your target 1, but you retest the prior zone. And you do so to the right of the downtrend for the first time. Think of it this way. We've been talking about looking for signals to the right of this downtrend. And I don't care how ugly people think this is. We're looking for the signals to the right here. That's what makes it significant. Still early in that phase, but we're coming into that season where that could happen relatively quickly. Give it time. Be patient. You will get an opportunity on this stuff. Some things are popping off. Other things, okay, they've gotten slammed. Let's look at a couple prime examples of, here's one that we talked about way back when, which was this Anchor T coin. And these were the arrows we drew over a week or two ago. We had some patterns down here around 2.5 cents. We were looking for that to go to 5.4. I think it was this one actually. There you go. It was 5.4 on the Coinbase feed. And then we got the crab pattern. It hit 5.6, doing a reaction back. And now we're looking for HSI for the type 2 on Anchor. This stuff can whipsaw in these reaction phases. So I wouldn't just write off the harmonics just yet. On Anchor, 3.6. Your XA level, you're officially in your type 2 mode. Your type 2 return for Anchor is already over structurally because you did the move up from here, from the low to 2.2 cents. And I said this was a percentage move where you go from 2.5 to 5.4. That's 100% gain. And then the reaction, the return phase, that's what it did. Now look at HSI. Deeply oversold, so you're not doing anything yet until that comes out of the zone. But that's where we are. Line it up to get it. This is going to be the even more significant opportunity. Here's the other one that we've been way in front of. Chili's did the same deal. This one now registered its return phase. This one got to target 2, which is 23.5 cents. But HSI triggered. Any check back? Not yet. But if we were in that trade, I would no longer be in that trade. I would look for the return phase for the retest. Whatever that next HSI is, that's going to be critical, and we're nowhere near there yet. So Chili's is done. You're done with Chili's, and this is the poster child for all of the reaction moves to target 1, target 2 we've been talking about for a while. There's several of those. Some have come all the way back. Here's crypto.com. Never got to target one. Still in the zone. About to register another HSI. This is what everyone should be pulling up on their charts and waiting for and looking and triggering off of. We come out of that zone in a day or 2 days, maybe 3. Okay. Then what do you have? You just have a delayed confirmation against that larger zone, taking its time. Don't expect crypto.com to be anything below maximum. Maybe you go back to 9.97 cents, 10 cents. You're 12.64 now, but nothing has changed with the longer term. And your weeklies, okay, are all looking like this. With an HSI that triggered either Sunday in some or trying to trigger this week. And we're going to see what it does off of that daily reaction. Is this just like a dud HSI after the long move down? Because like the rest of them, they're all trying to get to the right of that downtrend line. And we're now 3, 4, 5 weeks past cracking that downtrend. Every week we get further and further. It just improves the chances for this kind of stabilization after breaking the downtrend. Look at the last couple times that happened. I mean, not after such a parabolic move, but think of it this way. Okay, something like that back in 2020. Went up, sizable move. I mean, that was a 500% move from 5 to 25, and then still came back. This is crypto. These aren't stocks. These aren't bonds. This stuff moves like this. So if it goes up 300, 500%, expect it to come back and retrace 50, 88.6% of the move. I mean, what was that one? That was 85, 88.6 was like that. But the HSI has been a real reliable single indicator with crypto. I think better than other signals. No problem, Vlad. No, seriously. I just want to make it clear that it's where we are. This reaction phase is not easy, and the return, recognizing the traits of how that return takes shape within the framework, you have to go through some examples. Absolutely. Let me go to our classic patterns, because if we go weekly Ethereum, the precedent all the way back here. Oh no, sorry, it was Bitcoin. I keep coming back to this Bitcoin chart. Back here, there you go. Take a look. You go back to 18 and 2020. Because if we saw this bat pattern there, we'd say that's absolutely amazing. But it still did reaction, still came back for the return. And the return phase, going back to 2019, all right, went to target 2 and then rolled over. But formed another pattern, and then you registered HSI again. And that's where we are. I mean, that's really, we're looking for development to the right of the original downtrend from something like that correction from 2018. Give us another pattern. Give us some HSI. And all of this still points to saying the major developments will probably take shape towards the end of the year. If you're looking for a moon phase, or you're looking for the crypto cycle to go back into hyperdrive, it's going to be not until, I'm thinking, December, January, with a lot of the ways this is shaping up. So if we get type 1 reactive moves and then they terminate at target 1 or target 2 with HSI, you're done. Important to remember that. I think absolutely by Thursday, with some of these HSIs that are taking shape now, will show us where they are. So just be patient. We're middle of summer. Speaking about patience with markets in general, really important to highlight what's going on in the major indices. QQQs, the SPY, diamonds. Look, they all registered HSI last week and have rolled over, overextending the hop levels, but that's what we have been looking for and the follow through. And so this was what I was saying last week. Wanted to bring this up. Where is it? Where's those posts? On Twitter. Let me bring Twitter up. And this is why I posted this in Twitter and Discord, all of that. Really, I think it shows us kind of the dynamics. So where's the SPY? Yep. All right. Here are the NQs. So here's NQ. Okay. The return phase beginning now. And that was at 13,465. And they're all like this because HSI did pop out. What does that mean? It's happening. It's starting. So that rollover, that return for stocks really just started taking shape last week. Friday was the 3-bar reversal breakdown. Take a look at some of the other ones that I posted. And this was, and I personally cut out of some losers. Zoom video was a loser of mine. And what was the other one that I closed that out? There was another one. And then I took off my Amazon and didn't get short anything. I didn't get short anything. And I think it's still because we're in the summertime. And I think, we're just starting this now where you got plenty to go. Let's look at the Qs. And just be aware that this could be a sharp reaction phase back to retest the pattern levels that registered back in June. Where are the Qs? Here you go. QQQs down 6 today. And let me blow it up. So this was the work that we outlined from Friday. No HSI on that. What was the HSI? Oh, it was Tesla. But we're still in reaction phase where target 1 is at 303. So there's a lot of parallels to crypto where you formed a small pattern against the larger pattern, and you're coming back to retest the zone. I think Tesla's pretty much the one to be monitoring. Tesla and Apple. I said this on Thursday. So here's Tesla. At a high level HSI. Okay, pattern completed on Tesla at around 837. And then look, we had the HSI triggered on that close. That was the low. Okay, but remember how the check back works. We wait for the arrow to go, and then we let it come back and retest and look for the first bearish candle, which came in a little bit higher. Generally, 837 is not a bad number, but with some of the other targets and the shark target, look, off the bullish patterns that developed, this was the shark. No, so this was a bat on the daily. Target 1 on that for the shark was up at 855. So consider that reaction over. That's structurally the first thing we're looking for. Hit target 1 and then register an arrow that points down. That starts the whole return phase. And I would say 691 on Tesla is a type 2 return target. And look for HSI down here probably in a couple of weeks. But it's already, this is early. This stuff's still early, folks. And despite as nasty as the last few days have been, this is why we wait for confirmation. We recognize things like a 3-bar reversal. That's something else that always is a major factor where There's Friday's close. That was the first time, okay, since the confirmation that we took out the prior 1, 2, 3 day low, and we're continuing lower. That tells me we're in reaction mode. Minimum on the butterfly, 759. So we're still down. I'm not looking for any longs. I'm not looking for any longs here. I'll look for shorts, but I'm not looking for any longs until we come back and retest these larger zones. Tesla's a beauty because it also has this massive bat on the weekly. Is this going to trigger? No, it didn't. HSI didn't hit. Did not. It's not giving us the full return yet, but so I would focus more on the daily chart. But for me, daily, weekly, we'll look at 740 first. That's 130 lower from current levels. But I'm thinking if we get kind of the fall return, let's say this whole thing sets up like it typically does come September, October. These are going to be massive zones that we're going to be considering going forward. So I'm trying to apply just the framework. That's all we're doing here. Harmonic pattern framework. And ask myself the questions at each point. Did we get a reaction? Yes. Did we have beautiful HSI? Yes. We hit target 1 and now it's rolling over. The 3-bar reversal for Tesla will trigger under 840. Be aware of that. You're still 870. And then it'll shoot the gap. I mean, that's where then we look for what we like to see, serial moves, bar over bar, lower lows, lower highs, back down to the zone. They're not all in the same spot, but a lot of these are setting up in that regard, your daily or your weeklies. Let's look at Apple. Apple, 175. Okay, that's the daily deep crab going way back to last year. Mixed with another shark. A lot of back-to-back patterns here. This was the crab from last year that we were talking about, I guess, really since January, saying 175, that's the lid on the move. 175, and this shark came right back to 175. Apple, still quite early. Hasn't registered any HSI, so not as nice as maybe some others. I still like it because clearly amplified, get over here. Your amplified RSI is out of the zone on Apple. You break under the 50 level, that's where this thing should really start to drop. 152. Currently trading 169. That's the kind of reactive move that can happen pretty quickly. Not to mention, we're breaking trend lines. And your 3-bar reversal just happened on Friday. Look at this zone, okay? If we just took the shark unto itself. Here's pattern completion. No confirmation, but as soon as that takes out a 3-bar range, 1, 2, 3, and closes below it, which it did Friday, that's significant. That puts you into reaction phase without confirmation, not the best of what we want, but let's recognize it for what it is. 152. And these are the big ones that take us down. It's not going to take more than a handful of these big cap to bring the market indices lower. They're in that spot. But the only thing up today is natural gas. And I'd have to watch that as well. I'll go to crude oil in a second. Natural gas, is that about to blow out our $9 resistance? Do I have to rethink that? Maybe. I might have to rethink natural gas because I really thought anything above $9 was a sell. You're up 40 cents again today. You've got a major crisis going on in European delivery of natural gas. Almost unthinkable levels that's spilling over, probably driving U.S. market. And we're going to break out of that. Before I jump to energy, let's look at stuff like NVIDIA. A lot of these did reactions off the hops. Okay, going to take more time. They're breaking the uptrend off of the lows like that. So still reaction mode. Probably going to consolidate more in that zone. Some of these semiconductors gave nice pops, reactive moves, but that was it. They didn't get to target ones, and they're starting to roll over. Here's AMD. AMD looked like it was going to go for 107 off the bat. But on Friday, that did a 3-bar reversal. And with follow through, which is the other thing. So draw your trend line up. If you're in that trade, you're looking to just lighten it out, scalp it out. 107 was the target, and we're still looking for the return trade. That's my concern with a lot of these. When they come back on the type 2, they're going to go deep. And they're nowhere near registering any kind of oversold condition just yet. So I'm going to look for hourly stuff like this. Okay, deep crab right now. But here's something to consider. In these kind of really push down markets, you're going to get patterns like this. I would look for it to pop up and then fail. Come down and fail. A lot of these have to do on their daily or their weekly. We've got a lot of them are just, they're dragging out. They're going to take more time until they can register something more substantial. We got as high as, what was that, 104.50? We were looking for 107. But the fact that this is your daily trend line right here, that's broken. That basically by Friday, that was annihilated. Today, follow through. And Friday took it out there. Little follow through. If we can get a little counter trend rally, and that would be maybe give us another short opportunity, and that's what I'm looking for. August is a terrible month for options, in my opinion, because rarely are you going to get sustained moves. But we've got one more week, 10 days until September, and then September, expect some fireworks. Here's Amazon, and I mentioned this a while back. Let's go to the daily on Amazon of what it was doing, because it blew out the Gartley on the return phase. We showed this, like from there, and came back out. And I took profits off this. This was one of them I tweeted on. And I would not be surprised to see Amazon come all the way back down, fill the gap at 123. You're at 133. Look at the weekly. Amazon on the weekly now registering just this week. There it is. Another HSI trying to come out of the zone on the weekly. At best, this will consolidate between this immediate high and the prior low, basically 110, 105 to 120. 130, 135. But there's HSI coming out of the zone now. But I wouldn't be surprised, again, to see this register this week, and it'll definitely register this week, and then next week check back in essentially the same area. So you are 1-2 bars away from this really doing a larger drop or coming back to retest those prior gaps. Give it like a week or two. We'll get another shot at these. And now that they just registered, and the check back will happen. What was the other one? Was it Microsoft? A lot of them in just that big domain. Microsoft was no, Microsoft wasn't. Oh, I think it was. Well, here's the bat on Microsoft. another bat, non-confirmation. Had an ABCD at the low on Microsoft, but we had a lot of these bat patterns off the low. They're not ideal because they're not pulling off of an extreme high or low. It's more of what I like to call true harmonic, where the software, which really taught me about that and showed me this in action, if you have the proper A, B, C, D configuration with your B point to line up to show you where the true 886 is, that's a critical, almost invisible, but without the software it's invisible. But that set us up a zone between 285 and 297. So how do you know where on something like that? You have to wait for the individual bar to go negative. So that bearish candle came in about 3 days after the fact. That's your first sign. But really, Friday was the ticket. Friday's close took out a lot of 3-bar ranges that set this into a definitive reaction mode. And again, not saying this is going straight down to the bottom. I'm just saying we're back in a bearish reaction mode. 268. Until that hits 268, this reaction will continue. And maybe even come back with a lot of the back-to-back dynamics going on here. Beautiful ABCD off the top. But we know that hit target 1. I mean, target 1 reached, and you have a bearish pattern back-to-back. That's substantial stuff. So I'm saying minimum 268, but if this stuff really starts to fall apart, this return phase could happen pretty quickly and find ourselves back at the June lows at 241 for the ultimate confirmation completion type 2 reversal, where then, okay, if we get down here on the retest, and this is the framework in action, and we can register an HSI down here, that would be textbook type 2. And that's where I would look for the next opportunity on these. But the real acceleration of the reaction just started Friday with the 3-bar reversal. Challenging, I know. It's challenging. Oh, here's one that I just sold that I probably was a mistake on, was Mosaic. I dumped that because I thought that was a 3-bar reversal. That one might actually end up going to target 1. That was a real nice one that I had, but I didn't like it. Like Friday, I was just not having anything about it. And if any of them had a 3-bar breakdown reversal, now that's back up. I'm not going to jump back in on that. You've got a massive bullish engulfing, and my target 1 was at 62.20. I was just looking to pull profits, pull money out because I did not like what I saw. And that, maybe that does get to target 1. But for me, I felt like I was giving too much back already. And it had taken out the 3-bar move. We closed below it, and it was around 53.75. So 2 points, whatever. But that's how it goes. Really quick, let's do the energy. Let's go straight to natural gas. Because if we're going to have an energy crisis, natural gas is probably the place where it's going to happen. And we're officially there. Here's the crab pattern, okay, from target 2. There's target 1, or there's type 1 move. With the confirmation came here. You actually had 2 moves really down to target 1. There's your first one. And it reversed exactly. Your XA level was 797. The hop level was 916. Okay. But you got the first move down to target 1, and the second move back to the hop went to target 2. And this is where, if you go back to late June, where I was saying a lot of people were nervous, but I kept saying, look, 6 is the floor, 9 is the ceiling on that gas, and we'll deal with it that way. I still felt like we'd come back to 9. And then last week I was saying, let's lighten up here. Is that a mistake? Maybe. But we'll still catch it. I'm not too concerned about that. Because if this is going to go, it's going to explode, probably go above 10 to 11. Now, that's probably a big market we want to keep our eye on. The weekly shows a little bit differently, where look at the last two HSI signals. Okay. There's the first weekly arrow, kind of a sloppy check back, but you did get a move back down. Right there, check back, all of that around 8 and change. And then back early July, we got another weekly HSI. Has yet to close anywhere above 950. Look at the last few attempts. 1, 2, 3 big wicks. Last week, pretty strong close, highest close we've seen in the move. And now, today, if we get a close above 964, all right, we're going to have to say the pattern's blown out. How do you play that? Well, first of all, let's know where it's going to go. What's the target? Let's bring up the larger index here. Let's go to Nat Gas. Because Nat Gas is something that, amazing that it did this, but we have been in front of this for a long time, targeting the weekly retest all the way here. Weekly, monthly? Yeah, it's that big crab pattern. So if we're going to get the breakout move, and it's going to blow through these zones here, we're looking for it to shoot the gap back to the 1618. This would be that looping type 2 all the way back from 15 years ago, but yes, that's relevant. 1488's the number. So what's anything above $9 look like? Looks like there's some room to run. I'm not jumping on it. I'll look for, maybe we get an hourly pullback. I will update everybody on that. If it is to be, we'll get a bullish pattern somewhere along the lines. It's kind of let it do its first move, let it like turn on the light switch, show itself, and then we'll hammer down on this and then see if we can get a pullback, maybe back to $9, something like, come back down and then go. It's not going to blast straight on through. We'll get another opportunity, but shooting this gap, this historic gap, which I've been saying is a possibility for 2 years. We go to 14, 15 bucks. The European delivery is, maybe I'll bring that up tomorrow, that European Nat Gas chart, because that's a scary chart. And I don't want to get too deep into that conversation other than let's target the full return of the weekly, going back here, at $15. Personally, I think it should be there. It probably should be there already, but this could be the move where it starts. And there's nothing between essentially $10 and $15. I do have some ideas on it. It's not there yet, but when it clinches, it's probably something where we go on some call options into January, February with markets like LNG, Schneider Energy. That's your biggest liquid natural gas provider. And that's broken out, all-time new highs. Bring that up on like a 60. So, I mean, it's been straight up. But let's use HSI. We'll just target HSI, bullish continuation. HSI is on a 60-minute like that. We have another one there. And we'll get another. But get it on the radar because it has busted the range. Will it follow through? We'll see. And again, like all of them, there is plenty of time for this stuff. But we want to get ready because if it busts the move, these will go a lot higher. I mean, LNG could do something like this. Okay, go off of this last consolidation and then run for like a 314 parabolic move. 3618. You're at the 1618 at 167. Again, not a place where I'm longing anything, but let's say we spend a couple of weeks, get a little pullback, and then break out. Yeah, 225 on LNG is the spot, and we'll probably do some option plays on that because it's going to be volatile. It's going to be volatile. That's the way to think about it. And it's a bit different than, say, crude. The crude market looks like it's tired. Crude's like this. All right, there's your weekly. We did have something on the daily. I think it's a shark on crude oil. Yeah, there you go. Okay, beautiful. I know we were talking about this last week. And crude oil, did that get down to almost hit the hop at 84.57? But here's the thing that happened today, folks. Talk to me. Let's see it. Remember what I was saying about crypto? That we had a bullish HSI signal and we needed a bullish candle? Well, on Thursday, that's what happened. On Thursday's close, that happened. And then this morning, okay, we had the official check back. It came against that prior low, and it's right there. And we retested this morning, all around 87 and change. What was the exact low? 87.39. 87.39. So a fairly substantial event, think of it that way. A harmonic event happened this morning on crude oil. 87.39 was retested, held, we're rallying. Look at that. There's your crude oil futures. There's our 87.39. Maybe we should be warming back up to energy. Not a heck of a lot of bullish patterns that I've seen in the sector, but that continuous contract there on the 30. Look at that. They tried to throw it down straight to your HSI number, 87.40. And if you were looking for a stop, what's the limit where this fails? It's under today's low. Think of it that way. It's a huge, absolutely huge. On your weekly chart, trying to slow down, but here's the thing on the weekly. HSI is trying to come out. So maybe the energy sector, if we're looking for longs, is about to go. And that could be the takeaway. Maybe that's where you get your inflation to come back, your whole inflation narrative, and interest rates have to get jacked up. But this is an ideal high-level weekly continuation signal. I don't want to dismiss it. That's, again, for the HSI, it won't trigger until this week, but it's not far from coming out of the zone, and we want a bullish candle. So we're already bullish on the week. We'll follow this every session this week, but I wouldn't be surprised to see this thing. You're at 90. Maybe you close above last week's high, around 91, 90, 92. And then, of course, your 3-bar range, which is right there, looks like that. That's your 3-bar range. So if we put this in your head too, we close above 99 bucks on the spot price of crude, essentially the reaction, this downdraft would be over, and then we would look for possible continuation. It's been in a tough spot in the last, no doubt. They've spent the last 2 months throwing this down. We have an ideal pattern. You know, the shark pattern that completed way back in, what was that, July 6th. And just done a lot of sideways action. But we did complete HSI. This is a beautiful case where your pattern completion, you really need confirmation. You need harmonic strength index. It's like this. Let me get some things out of the way. You can't really see it, but that's where the pattern completed. That the software shows you that sun icon. But now we're waiting for the pink arrow, and it didn't come. It spent more than 30 days. It spent probably 45. There's your first confirmation. Okay, first confirmation. And today, successful check back this morning. 2 hours ago, that happened. And that's one of the biggest developments in the market, period, going on right now on energy. So, and we'll talk about call options. This is what I'll come back with tomorrow. I have some ideas on some call options for some energy plays because this is still early. We get a 3-bar move above this. All you need is a close above 91.70 and you are in business. And in business in terms of even off the pattern itself, going back to 107 as target one off the chart. So I know a lot of the tech stocks, I know the market does not look good, and it's not because it just went into reaction phase. Energy is a different story. We need a strategy on how we're going to capture that move from 10 to 15 on nat gas, and then this reaction move on crude oil, minimum up to 107, 108, or whatever the first HSI is up here, which kind of makes sense because look, it's almost inverse. There's the 21st where the tech's bottom was the top on crude, and you grind down. Now you register your first confirmation. Meanwhile, tech's rolling over. Seems like we might have a few ideas here. So we'll come back tomorrow on all of that. Yeah, we'll look at that. That's a good one. The David saying the Dutch nat gas contract is going to outer space. I agree. There's no way there's no way that those prices are going to cause something crazy not to happen. So maybe tomorrow, here's some ideas. Okay, tomorrow we'll come in. I'll have some energy ideas. I want to look at some currencies. I want to look at that euro. That looks like it's in trouble. Euro versus the dollar. We'll look at some dollar markets. And let's see how we can maximize opportunity on what's going on. I mean, I'm looking at Nasdaq right now. It's rolling back over, and Nasdaq right now is down 290. We're going to get some big days. We're going to get a Dow down 1,000 day pretty soon, in my opinion. We're going to get Nasdaq to drop, and I think they'll drop pretty hard back down to the June lows. Reaction phase is over, folks, and that's what we need to kind of prepare for going into the next 6 weeks. So that's what I have for today. Come on back tomorrow. We're here Monday, Tuesday, and Thursday, 12 noon. Thursday we give away some books. We'll do that again. But let's just get ready. Be patient with the markets. We'll line up some real opportunities tomorrow. Until then, go get them, and we'll see you then. Thanks, everybody.